What is AMD/PO3? So AMD is accumulation, manipulation, and distribution. Also known as PO3, so power of 3. The 3 being accumulation, manipulation, and distribution. This is essentially what runs all markets. What I mean by that is, on every time frame across all assets, price moves in one particular pattern, which is the AMD. Whether it's the weekly profile, the daily, the 4-hour, the 1-hour, because price is fractal, it doesn't matter if you trade support and resistance, ICT concepts, order flow, price always moves in this way, whether you think about it like that or not. As with any strategy, you need a criteria to meet. You can't simply just see the AMD profile and then trade it. So let me give you an example, a very simple example, what AMD is. So you have accumulation, so consolidation profile. You have one side of the range, another side of the range. You have a manipulation of the accumulation and then a distribution. It also works in the opposing manner. So you have accumulation, buy side and sell side. You have a manipulation in price, and then you get a distribution. As with any trading model or strategy, you need a criteria. You can't just simply see an AMD signature in price and trade it. There is a certain criteria. With this criteria, there are two things. One being you need a higher time frame bias, and you also need a key level. So let's give another example. If your bias is bullish, you would want to see an accumulation, so a consolidation profile. You want to see a manipulation of the lows or sell side if you're bullish, and then you see the distribution. Same thing if you are bearish, you have an accumulation, so consolidation profile. You would want a manipulation to occur of the buy side or the highs of the range, and then you will want to be part of the distribution. Along with that, we have our key level. So not only do you need your higher time frame bias, but you need a key level, so a PD array, whether it's a fair value gap, an order block, an old high or low. It depends on what sort of model you trade. For me, the best PD array that I use is a fair value gap. So let's say we have a bearish bias. So let's say we're on the weekly profile. We have a fair value gap. Let's use a box. We have a weekly fair value gap above. And then we have Monday range open up, which accumulates. So Monday buy side, Monday sell side, creating two sides of a range. So buy side and sell side. As I said, our higher time frame bias is bearish. What we want to wait for is a tap into a key level before acting. So accumulation here. We then get a manipulation of the highs into that higher time frame PD array, which is our fair value gap on the weekly time frame. We would then drop onto the lower time frames and try to get in line with the distribution lower. One example would be targeting Monday lows, putting your stop at the high. Ignore the RR for this illustration. And then throughout the week, you will have intraday AMD profile. So again, our higher time frame bias is bearish. So we'll get accumulation ranges on the lower profiles, lower time frame profiles, manipulation of the highs, and then we can go short towards our higher time frame targets. Like so. There are two particular AMD profiles that I use pretty much every week. The first one is Asia and London Open AMD. I've actually already made a video on my Asia range model, and you can go check that out with the link below. This goes into a bit more detail as to why the Asia range model works. So what we would want to see is Asia to accumulate, i.e. consolidate. You have a buy side and then you have a sell side. London will open up, maybe chop around a tiny bit. If our bias is bearish, we would want to see a sweep of the buy side of Asia, dropping onto the lower time frames to get in line with the bias and the delivery, and then we would target the opposing ranges of liquidity. The same goes for in a bullish scenario. If our bias is bullish, we want a sweep of the sell side, which is the manipulation, and then we get in line with the distribution towards higher prices. In some scenarios, we have Asia and London accumulating, and then we would trade New York as our AMD profile. So Asia may look something like this sometimes. Again, accumulation. So let's have a box just to show this. So we have an accumulation. So we have Asia, and then we have London open up as well, which is also a consolidation profile. Sometimes London may even take out buy side and take out sell side without distributing lower. So here we would wait for New York to open up. And again, the same thing goes back to what is our higher time frame bias. If our higher time frame bias is bearish, we want to see a sweep of the highs before we try to position it lower. So here we have the accumulation in Asia and London. New York pushes higher to sweep out the buy side, which is the manipulation, and then we get the distribution lower. Again, the same thing happens in the reverse when we are bullish. As I said earlier in the video, price is fractal, so it happens across multiple time frames at the same time. There are a few time frames that I like to pair, which I will give you now. So the 4 hour is nice with the 50-minute time frame. The hourly time frame is good with the 5-minute time frame, and then you also have the 30-minute, which is good with the 3M time frame. So with these fractal time frames here, if I see an accumulation and a manipulation on the 4 hour, I would drop down onto the 15-minute for an entry to get on side. Same thing with the 1 hour and the 5-minute. If I'm profiling on the 1 hour, I would like to see an accumulation, a manipulation, so like a closing back inside the range, and then I would drop onto the 5-minute, which would be my lower time frame entry model. And then the same thing for the 30-minute. If you're profiling on 30, you would want to see an accumulation, a manipulation, and a close back inside the range, and then you would use the 3-minute as your entry time frame. As with any of my trading models, if there's no manipulation or a sweep, I do not frame a trade. I always want to see a manipulation of one side of the liquidity or the range. Without that, I'm essentially shooting in no man's land, because what the manipulation is it's collecting liquidity and fueling the real move. So let's think in terms of retail. We have accumulation, let's say London, so buy side here and sell side here. What is resting above buy side, if we have a bearish bias, is a pool of liquidity in the sense of buy stops and sell stops. So people would be short, putting their stops above here, their stop loss above here. So as soon as price sweeps there, liquidity is collected. It's the same as breakout traders. People would like to see price push above this range to retest and then to trade away. So they would be filled. Again, price would collect the liquidity to use as fuel, setting them offside and then using them as fuel to go in the opposite direction. When it comes to trading, you want to try reverse engineer as the majority would be thinking at any one time. And this is what's useful with AMD. What I like to say is it's a no raid. You've probably heard this before. No raid. Let me use text instead. No raid, no trade. Because you can then be caught offside yourself if there's no manipulation leg. You always want to be part of the distribution leg. Now let's go into some examples on the charts. So here we have the pound against the dollar. Here we have a fair value gap on the 4 hour. What happens here? Price opens up on the week. We see price push higher above these equal highs here, tapping into the fair value gap. So here we have our bearish bias because the 4 hour is in bearish order flow. We have the tap into the key level, which is our 4 hour fair value gap, and then we drop down. We get a sweep of the highs here, as you can see. And then what we wait for here is we wait for a lower time frame confirmation. So a lot of the time I like to use the change in the state of delivery, which shows a market structure shift. So here we have the sweep. And with the change in state of delivery, the last set of candles prior to the sweep is where you would mark out your change in the state of delivery. Here, I wouldn't label it as a change in state because it's not a clear close below. I know we use the open, but it's not a clear close below the low. So here would be the change in state. What we would wait for here is a tap back in on the change in the state of delivery. You could set your stop loss above the high or above this 50-minute gap here, and then you would target opposing liquidity. So here we have some down here, which would be Wednesday New York AM from the previous week. So we have accumulation in Asia, like so. In London, we have the manipulation. We get another sweep of the highs here. And then we get the change in state and distribution. Now let's give another example. So let's have a look. So we have Asia in and around this area here, which is from 8 p.m. Eastern Standard Time to 12 p.m. Eastern Standard Time. So that's your accumulation. We get a manipulation of those highs here. Once we get the manipulation, what do? We drop down onto the lower time frame to get on side with the order flow. So because we use the hourly, we're going to drop down onto the 5-minute time frame. So here we have the accumulation. Here we have the manipulation. That's your manipulation. And then we get our distribution lower. So accumulation in Asia, London manipulates. Then we get a change in the state of delivery here. Is the last big bodied candle before the sweep. I like to use big bodies when the other bodies are small. So there's your change in state. We could enter off here, but sometimes I like to wait for another confirmation just to make sure price really is wanting to continue following the trend. So what I do here is I might go back onto the 1 hour just to get a double confirmation. So what do we see here? We see a 1 hour fair value gap here. So let's mark that out, 1 hour fair value gap. We drop down onto the 5 minute. And then the same thing again, as I've said before, because price is fractal, it happens across multiple time frames at the same time. So here we have the 6 a.m. candle open up. We get a manipulation of minor buy side. So these highs here. And then we can get on side again. Again, this 6 a.m. candle could be used as your change in state. So that's like a double confirmation. We can then put our stop loss at the high of the gap, just in case price does retrace in, which it does sometimes. So let's mark this out. We have an accumulation. Then we have a manipulation, which is this sweep here, very tiny. Then we get the change in state delivery, so we're back on side with the high time frame bias. And then we get our distribution lower. Again, you could have went for a 2R, which is easily delivered, or you could scale off here and leave a runner lower. So now you might see price through a different lens, no matter what strategy you trade. It happens across all markets and assets every single week on all time frames. If you enjoyed the video, please leave a like and a comment if you enjoyed it. It would be greatly appreciated. Or if you have any questions, do leave it in the comments too. You can also message me via my Discord and or on Twitter. I will get back to you as soon as possible. For now, take care of yourself, and I hope you took at least one thing away from this video. Even if you took one thing, that is superb. I will catch you all in the next video.